Great to be here. I'm going to do something a little interesting today. It's going to be educational, and I hope that you'll leave here in about an hour with something usable and that you can implement in your trading hopefully right away. So today's topic is the ADX indicator. It's an indicator that will improve any trading system or methodology. And what I like about this particular presentation is what I've come to realize about doing webinars over all these number of years is people, for the most part, the participants already have some type of trading system or method, or they're experimenting, or they're learning, or they're improving. And the beautiful thing about what I'm going to show you here today is it can really be an add-on to something that you're already using. It has some great features. The way the indicator acts, it can be used as a trend signal, a dead zone signal, stay out, get in, trend is starting, trend is ending. We'll show you all that in a couple of minutes here. Let me just see if I can move the slide forward. There we go. So what's very important for me anyways is that there are no special indicators or software required. 99% of all available charting platforms can be used to trade the setup that I'm going to show you, including some free charting platforms, and I'll even show you which ones those are and how you can set it up on those platforms. And it may not say, okay, whatever, that's nice, but the great thing about that, and the really important thing for me, is I believe that people like myself become traders and come to trading and build careers around trading because they have a desire and a need to be independent, control their own destiny, do their own things. Why, we work for ourselves, we work when we want to work, and we make our own schedules. And then what I've found over the years of doing this is quite often some traders get tied into a black box or some special coded indicator, and they don't really have any transparency. They don't know what it is that they're being shown because they can't drill down, and pull off the cover and see what's actually going on inside. So what happens is at some point every indicator fails, right? Nothing is 100%. And when that happens, if you don't know the ingredients that went into making up the setup, if you don't know what the indicator is comprised of, you tend to lose your confidence in it, and then you bounce around from one setup to another, from one indicator to another, or even worse, the company that sold you this, special coded black box indicator, or encrypted indicator, all of a sudden goes out of business, and now your livelihood is tied to the company that you got this from, and guess what? Now you're out of business because either their indicator stopped working or they're out of business. And I never wanted to be in that situation. It's one of the reasons why I got into trading, so many years ago. I never wanted to be tied to anybody else. I wanted to be able to do my own thing. And that's why all of the systems I develop, all of the education that I do, and everything that I teach is always based on this transparency of indicators that are readily available. So I have no indicator to sell you. You can pick up this indicator on just about any charting platform. I say 99%. Because I've yet to see a platform that doesn't have it, but I'm sure somewhere out there there's a platform that doesn't include it. But by and large, everything I've come across has this indicator, and this is one of my own fundamental beliefs. And so I just wanted to share that with you. So whether you've seen webinars that I've done on this ADX system or on market profile, it's always based on that same transparency and that same notion of let's be completely independent and accountable for our own actions and our own trades, and not be beholden to anybody else's black box or encrypted or coded setup. So that having been said, the question I often get is, why would I just simply give away this incredible trading information? And you get that from time to time. Hey, Greg, if it's so great, why would you just put it out there and show it to me? Why wouldn't you keep it under covers? And because I believe that trading is a journey and not an event. You don't just pick up an indicator, a setup, an idea, and then from Monday to Tuesday become the world's best trader. I wish it were true, but it's not the reality of trading. The reality of trading is it's a dynamic endeavor. Things change all the time. You've got to be flexible. You have to understand your systems and your methodology, and you have to be willing to always be learning and always be willing to adapt with the small nuances of the market and small little changes in market conditions and volatility. So I hope that after this 1 hour presentation, and I show you just how quickly you can learn this one indicator and this one setup that perhaps if you want to take your trading education to the next level, that you'll consider doing it with me at either Chart Pattern Trading or the Trading Zone, and those are the two companies that I run on the trading education side. So that answers that question. All right, let's dig right in. It's going to be a little bit educational now for about the next 45 minutes. Nothing too complicated. Like I said, it's a system and an indicator that can be learned pretty quickly. So if you have any background knowledge in trading at all, you'll be able to follow along just fine. If there are any questions that pop up, if they're relevant, I'll answer them as they come up. If they're outside of what I'm talking about, I'll leave them to the end and we can address them at that time. So what is an indicator? Some traders have a mistaken idea that an indicator is going to predict the future, right? That if something, some pattern or signal shows up on an indicator, that there's a certainty that something's going to happen next, and that's not the truth. The truth of the matter is it's going to help you better interpret what just happened in order to get a better sense of what is probably going to happen. So an indicator is nothing more than a mathematical calculation that helps you measure what just happened in the market. What we mean by that is recent price movement. When we talk about things that are happening in the market, essentially what we're measuring is the movement in price. If price doesn't move, there's nothing to measure. If price moved, then we can measure it. We can say how much did it move, how much energy was required to make it move, and how far did it go. You know, and did it go in a single direction, etc. So these are the tools that we use. The indicators allow us to measure what just happened in order to better predict what may happen in the future. So there's no certainties in trading that something that happened once is always going to happen again, but trading is based on probabilities. And we know that if this particular pattern or this indicator led to a certain outcome the vast majority of the time, then we use the math and we say, well, there's a pretty good probability that if it happened before, it's going to happen again. So we work on probabilities and not certainties, and we use mathematical calculations to see what just happened in the market and how does that look based on a historical perspective every other time it's happened, and now do the statistics tell me that I can rely on this for the market moving forward. One of the reasons, just a little sidebar, one of the reasons why technical analysis does work and we can rely on patterns and movements with a degree of reliability is that markets are made up of a group of traders, a group of individuals, right? So if you take as an example any given stock, and we'll just use that as an example. Look at Apple, because Apple's on the screen here today. How many people are trading Apple today, right? Let's take a random round number. Let's say there's 100,000 traders trading Apple today. It could be more, it could be less, I don't know. But let's say there's 100,000 traders actively trading Apple on today, a given day. We know from you know, measuring volume that volume tends to stay consistent in any market or any given. I don't see these quantum changes. It's not like a stock trades 1 million shares in one given day, then down to 100,000, then 10 million. It tends to cluster around the same volume. So we know, given that math again, that what's happening is we tend to have the same group of traders trading the same instruments from one day to the next. Now, it also stands to reason that that group of individuals, those traders, is not going to change dramatically from one day to the next. So if we have 100,000 traders Monday trading Apple, and we have 100,000 traders Tuesday trading Apple, it would be almost absurd to think that it's a whole different group, that the first 100,000 was replaced by an entirely new group of traders, right? Perhaps 2 or 3% left and another 2 or 3%, you know, decided to trade, but by and large, the vast majority of the traders in a particular market or in a particular stock are the same day after day. They're either market makers, they're speculators, or they're investment funds. But those who are active in a particular market or in a particular stock tend to be the same day after day. So that's one given that we know. So the next thing we know is that humans are creatures of habit. Given certain conditions, they'll tend to react the same way. So if we have the same group of people trading a particular market day after day, and we know that human psychology says that we'll tend to react the same way tomorrow as we did yesterday, given the same conditions, how then can we quantify that? How can we map it? And the answer is technical analysis. We say whenever something happened in the past in this particular stock or market, there's a very good probability it's going to happen again in the future for those two reasons, same traders and human psychology. So it doesn't mean that every market and every stock is going to respond the same way to every pattern, right? There can definitely be some discrepancies. In other words, you may see a great pattern that happens all the time on Apple that's very tradable because of the community that trades it, but it may do absolutely nothing for you on, let's say, Adobe or Cisco or whatever else. Different group of traders reacting differently. So that's why we use indicators. So the differentiation that I like to make is let's understand what the indicator is telling us and not put this false hope and set the bar so high that every indicator is going to provide some type of magic crystal ball and tell us what the future is. It's not. It's going to help us better predict what the likelihood is based on the empirical evidence, the calculations of things that have happened repeatedly in the past. So, standard indicators, RSI, MACD, etc., they all do the same thing. Also, based on what is an indicator, let's go into the different points that I believe are necessary for an indicator to work for you in your technical analysis and your trading setup. Number one, a good or properly configured indicator should have the following characteristics. It should be graphically appealing. So if it looks really ugly, I know some people laugh at this, if it looks really ugly, right, and you can't really see what's going on in your chart, you're not going to be able to use it. So it should look good. And that may mean making some tweaks or some adjustments to your line colors, the shape of the indicator, a bar versus a line versus a histogram, something that you can look at and it resonates. It tells you what's going on in the market. It should be easy to read. So there are some indicators that work really well, but because of the math that they use, the difference is in the readings and the output reading can be so tiny that it's difficult to read. A reading of 1 versus 1.001 is very difficult to interpret. So that's the next thing. It should be easy to interpret. So those levels of overbought, oversold, etc., should be clear and obvious, right? We don't want to have like such a narrow window of what is considered a good reading and a poor reading. So we want to have that easy interpretation. All this, obviously, because we don't want to have confusing or contradictory signals. It would be terrible if one person looked at an indicator and say, hey, this market is overbought, and another person looked at it and said, no, it's oversold. We want it to be very obvious what we're looking at so that anybody who's using it is going to interpret it the same way and come up with the same understanding and ultimately use it in the same way. And lastly, and the most important thing that sometimes we forget, is that it should reveal more information about the price movement and the market. And the reason I bring that up is I've seen over my years of educating that traders tend to, or some, especially when they're new to trading, overload their charts with dozens and dozens of indicators, trying to get that one little edge, one other little edge. And in the end, what they're doing is they're creating confusion, right? They're getting contradictory signals from the multitude of indicators, and a lot of these indicators are redundant. They're not telling you more about the price movement. They're just repeating the same information over and over again in a different format, just spitting out the data in a different type of line or a different type of curve. So we want to make sure that whatever we're using, whether it's what I'm going to show you here today or anything else that you may be using in your own trading, that it reveals more about the price movement. And if it doesn't, you may want to consider getting it off your chart, and uncluttering and kind of cleaning things up a little bit. That's up to you. So now that we have a little bit of background about what is an indicator and how it should be used, let's jump into what we're going to talk about today, which is an indicator known as the ADX, which also goes by a number of different names. The DM indicator, ADX stands for average directional movement. It's also known as the DM indicator, directional movement. It's part of a group of indicators created by J. Wells Wilder. Name may be familiar to you. He was also the creator of the RSI, which is a much more popular, but in my opinion, not as impactful indicator. But he was the creator of it. And we'll get into this a little bit later, but depending which charting platform you're using, you'll find it under different names. I'll repeat those names again: ADX, average directional indicator, DM, or directional movement indicator. And I can't really figure out the reasons why every other indicator goes by a single name. This one, for whatever reason, different charting platforms have come up with different names for it. So one day, hopefully, that answer will be revealed to me. One of the things I love about it is it can be used successfully on its own as a trading strategy. You can build a whole trading system around just the ADX, or you can implement it, use it as an add-on to something else that you're using in order to filter out bad trades, keep you out of zones in the market where you shouldn't be trading, and most importantly, tell you when trends are ending, beginning, etc. So it's incredibly flexible, and it fits into all those other criteria that I mentioned, so I think that you'll really enjoy it. Okay. The ADX has 3 components to it. Number 1 is the actual ADX, stands for Average Directional Index. And the term is a little misleading because it doesn't actually measure direction. So I don't know why they gave it this name, Average Directional Index, but what it measures is strength or lack of strength in the market, and it doesn't actually measure direction. It's actually a non-directional indicator. So for whatever reason, the name is incredibly misleading, but don't worry about it. The other 2 parts of the indicator is the DI+, that's directional and measures the bulls or the buyers in the market, and the DI-, which are the bears or the sellers in the market. So those are the 3 components. Today, what I'm going to be focusing on is just the ADX component, the measure of strength, because this is the what I'm going to show you is how to extract this one indicator, one part of the 3, and use it and apply it to anything else you may be using. That's why I call it the one indicator that can improve any system. So that's the one we're going to focus on. The other 2, the DI+, DI-, that would be used if you wanted to actually build an entire system around the ADX. But you know, time constraints and everything else, we'll get just enough time to talk about using the DX as a component in something else that you're already using. So let's say you were to, Andrew's asking, do I use it for day trading? I'm going to show you actually I use it for day trading, swing trading, position trading. I'm going to show you a number of different charts coming up where I actually have different time settings, different chart types depending on which time frame you're trading in. So it's flexible, Andrea. You can use it from quick scalping to longer term position trades. Now, when you first load it out of the box, call it, right, the conventional setup, this is what it looks like. And when I was first introduced to the indicator and the patterns, I found it incredibly confusing, and I put it away. I looked at it, and I couldn't really make heads or tails of all 3 indicators. So when you have 2 lines on a chart, it's pretty easy to interpret. You know, one goes up, one goes down, they crisscross. You can look at it quickly and make a decision. But when there were 3, it became exponentially more difficult. And even though I've been doing this for 25, 28 years now, my brain just couldn't grasp that 3rd line, and I found it so complicated, I don't know, that I kept taking wrong trades and making wrong decisions. So I put it away. I didn't use the indicator. And then, you know, in discussions with some other trading buddies, and I discovered that people were having a lot of good success. And I thought, well, maybe I should look at it. I should revisit the indicator. If people are doing well with it, you know, I'm as smart as the next guy. Let me see if I can make heads or tails of this. So what I did was something that I'm known to often do, is I tweaked it. I cleaned it up. I, you know, redrew it in a way that made sense to me, that I was able to interpret it, and then you know, essentially use it. So it goes back to what I was talking about earlier of, you know, is it clear? Is it clean? Is it easy to read? Can you interpret it? So one of the first things I did, so this is my own configuration, and there's nothing really crazy or magical about it. It's just a little bit of a desire to make it look clean and to better understand the output. What I did was I extracted just the ADX part, and I'm going to show you how to do this. Actually, I'm going to show you the configuration panel. I extracted just the ADX part, and that was that squiggly line, and I hid the DI+, DI-. Right? I actually removed them from the panel. So now I have a pretty clean indicator that I can look at and interpret. So all of a sudden, all right, step 1, now it's looking good. let's see if I can interpret it in terms of understanding what the market is doing and place some trades around it. So I'm going to just show you on two charting platforms. However, with the the caveat that it's not any different on any other platform. So this is Infinity, and I'll show you on this is on the Sierra charts, and I'll show you on NinjaTrader, and I'll show you also on a free charting platform that it's pretty much identical to set it up. Peter is asking, do I have different settings for different strategies? Very, very minorly tweaked, Peter. I'll discuss that a little later on. Let's get to the whole configuration and then be happy to review that. So yeah, on TOS, absolutely, Thinkorswim. I don't use TOS, so I don't have an infographic here to show it to you, or on Metastock because I'm not a user. But hopefully, maybe after you've seen the presentation, if you set it up on TOS or Metastock, send me back a graphic of it, so I'll include it in the next presentation. But it's really not very complicated. All you have to do is change. If you know how to install an indicator, which I guess everybody knows how to do on any platform, it's just a matter of changing one setting. So the indicator is called the ADX, right? You add it to your panel, and the directional movement, that's the second component, which you don't necessarily need. In this configuration, you can install them separately. In other configurations, I'll show you on NinjaTrader, they install all three together, so you're going to have to extract or exclude one. I'll show you how to do that. So you add the study. Now, there are, like I said, there are sometimes they give you the choice. Do I want to install the ADX with the DM indicators? And I don't, right? What I'm trying to do is just get the ADX in there. So if you have that option of loading all three of them, this actually does 4 of them. It does the ADX, the DM indicators, plus a moving average of it. So they've overly complicated by adding a 4th one. So what I'm saying is if you get that option, don't use it. It's only going to overcomplicate. It's way too many lines. We just want to isolate the ADX component. So if your charting platform says, here's an ADX, you can install it. If it includes ADX plus the DMs, right, then we'll have to extract the ADX only to not show the directional movement. The next thing I've done is I've set by default, the ADX sets up as a line, as I showed you on the first screen, right, a line chart. I like it as a bar because I find it easier to read. And that's just a personal preference. It doesn't change anything you're going to look at, but as a personal preference, because so many indicators are drawn as lines, I wanted to differentiate it, so I did it as a bar, or what they call a histogram. Now that choice is up to you. I'm going to show you mine set up as a bar, but it doesn't change anything you're going to look at. It's just from a visual perspective. Now the next thing I do, and this is quite important, is some indicators come with these, horizontal lines that they overlay at the top and the bottom, right? Overbought, oversold areas. Like when you set up a stochastic, you get an 80-20 line. Sorry. Great idea. Thank you, Johnny. Yeah. So sometimes the horizontal overbought and oversold areas are already there, and you just have to set up where they are. For what we're doing, I'm going to set up 3 levels, 10, 20, and 40, and I'll explain these to you. So in Sierra charts, I don't get that, so I had to add an additional indicator called horizontal lines. These are just fixed horizontal lines. It's overlaid on top of your indicator. They're not doing anything other than drawing a horizontal line at the number 10, at the number 20, and the number 40. That's all they're doing, right? It's not an indicator. It's just adding this very fixed horizontal area on top of your indicator. So on NinjaTrader, same thing. You want to change your display to display as bars, and that horizontal line is called constant lines. 10, 20, and 40. So if you did it on NinjaTrader, you'd have them set at 10, 20, and 40, same thing. And the way you would exclude, so when you do set it up on NinjaTrader, it actually comes pre-packaged with the 3 lines. So the way you overcome showing the other 2 is you just change the color, right? You set the color to the same color as the background. So the DM plus, DM minus, just set it to white. They don't show up. They're there, but you're not going to see them because of white on white won't show up. So it's just a little workaround to say, show me only the ADX. And I just change the display to bars, and I set up, also it's a built-in indicator called constant lines, and it's just going to drop a horizontal line at 10, 20, and 40. And those are the 3 levels that are important. Now, if you can't set it up as a bar because your platform doesn't allow, I know there's a couple of platforms out there that don't let you change the display type. It's not going to change anything other than what it looks like, right? It's not going to change how you use the indicator. I would guess that there is still a way to do it. You may have to jump inside the code and make a small little adjustment, but I wouldn't stress about it because it's not changing what's going on. It's just a visual preference that I have. So I have it now set up clean, easy, and accurate to read, and now we can move forward and decide how to interpret it. So what do I have? I have an ADX indicator, out of the box settings, right? So it's set as a 10, this one is set as actually as a 14 period. I set them up as a bar, and most importantly, I've got 10, 20, and 40 as these horizontal lines measuring overbought and oversold areas. Okay, clean, easy, accurate, nothing too complicated. Let's jump in now and see, well, now that we've set it up, this is what it should look like. How can we use it? Oh, here's another one. This is, I talked about free charting platforms. There's a number of them out there. I just happened to set up this presentation using freestockcharts.com. There's also a number of others. There's, what's it called? TradingView or TradingView? Yeah. Also a free charting platform, and you can do the same thing over there. Oh, hold on. This is, Mark has given us some good information. On TOS, add the ADX indicator and the DMI indicator. On the DMI, just uncheck Show Plot. That's great info. You know what I'm going to do is, can we copy that? I'm going to copy that and resend it back out. Thank you. Appreciate that. There's the settings for TOS. I'll repost those at the end of the presentation for the TOS users. Okay, so the length for the ADX is at 10, 14, or 20. By default, it is 14. You can see the last chart was at 14, right? 14. If you're actively day trading, John, if you're looking for more aggressive scalps throughout the day, you're going to want to accelerate that to 10. All right, we can talk about the settings a little bit. So on freestockcharts.com, you would just go down to the, there's a little panel, where is it? Should be over here somewhere, and you right-click it, and you just change the setting type to bar histogram, and it'll change the line to histogram, and you select, to do that on all your charts. You can actually just set up a template and have the same chart over and over again. Same thing, you actually physically draw a horizontal line at your 10, 20, and 40, and then when you right-click on it, you say replicate on all charts, and now you have an absolutely free charting platform. And you can build the template once. It'll take you 10 minutes. Well, it'll take you 5 minutes. You can also do it on TradingView, same thing. But I'll specify that the bar looks good. I prefer it. If you're having whatever trouble with it, or if your platform absolutely doesn't allow it, it's not going to change the use of it. It'll just change the look of it. Okay, so that's on freestockcharts.com. So let's jump in and say, look at what so now we have the setup and the configuration, fantastic, but what can we actually do with it? Ninja, yeah, Ninja, it's built into Ninja. TJ asked just quickly. Here's on Ninja. You go to your indicator settings and you right click and you change your display setting, display as bar. By default it displays at a line, you just scroll down and do display as bar. So let's talk about how we can use it. We won't dwell too much on the setup because it should be pretty straightforward. And if it's not, it's kind of worth your while to play around with it and get it to look right, because being able to set up an indicator and adjust it and modify it is like a basic skill of traders. It's kind of like buying a brand new car, but you don't know how to fill the gas tank. You should be able to refill it. So spend a little time getting to know your platform. It really is. It's not difficult. Add indicators, remove indicators, change what they look like, play around with it. So what can we learn now that we've got it set up? How is this going to help us do better, understand the markets better, hopefully take better trades, etc. So here are some of the things that we're going to learn from evaluating or interpreting the ADX. Is there a trend, right? Big question. It's what everybody wants to know about the markets. Is there a trend? Because if there's no trend, should I be in a trade? If the market, using the historical change in price, something that just happened, if the market cannot definitively tell me if there's a trend, then what business do I have taking a trade? Unless there could be an option trade, but we'll talk about that in a minute. But if you're taking a directional trade and there's no trend, then it's kind of inconsistent. There's no trend, you should be on the sidelines. If there is a trend, how far has it already gone and how much is left? And that's a question that a lot of traders are, do I get out? Is this a pullback or is this a reversal? What do I do? Do I tighten up my stop or is this thing going to keep running? So let's get deep into this trend, right? What's how much is left in there? Is there still some juice in this thing? Or are we in a chop zone? Are we in an area that perhaps I should be standing on the sidelines? And the next area, this goes back to how far the trade has gone, or it's going to reverse, or there's still room in it. Will this area of support and resistance hold or fail? Right? I'm running into some resistance here on a long trade. What are the chances it reverses at that level or it plows through? Is there an indicator that can tell me? Well, hey, guess what? That's why we're here. The ADX does a great job of revealing these things, and let's get into it. I told you about 10, 20, and 40, right? So those are the three areas that you want to watch on your ADX indicator. 10, 20, and 40. Let's go and understand what these three levels mean. 0 to 10, there is absolutely no trend. 0 to 10 means that there's so little energy in the market that anything can happen. Any number of small traders can come in and move the market around. So it is completely random. So if you want to be in the market when you have a 0 to 10 number on your ADX, it's pretty much a crapshoot. You have no idea what's going to happen. 10 to 20, the market is transitioning. In other words, we're starting to get energy in a particular direction. There is some interest building in the market. That's your hello, heads up. Let's pay attention. Something's going to happen, right? So 10 to 20, that's when you set your alert to say, all right, let's see where we can look for something to happen. So 0 to 10, go make a cup of coffee. Nothing's happening in this particular market. 10 to 20, let's sit up, let's pay attention, let's focus. I need to start looking for the trend. 20 to 40 is your trending zone. That's when the market is in the sweet spot. That's where the heart of the trade is 20 to 40. Once you're above 40, the market is now in exhausted territory, right? This particular trend is just about run its course. We're going to start to look for reasons why we are going to get out. So this is not correct, BC. This is not directional, right? This is strictly a measure of strength. In other words, we can run up to 40 on a sell-off, and the sell-off will have been exhausted. We can run up to 40 on a rally, and the market gets exhausted. So it's just a measure of strength. You can use a number of other indicators to understand the direction, but we're kind of focusing just on using this as an add-on to something else you may be using. So just as a sidebar, because you asked, so what could I use for directional? You can use a number of things for directional. You can use a MACD, you can use a trend line, you can use market profile, you can use support and resistance, right? You can use anything you want to determine trend. Sometimes just, you know, trading naked, just looking at the market, which way is it moving? So what we're doing now is we're measuring the strength, or what we should actually call it, the trendiness of the market, and not the direction. So we can see how this market rallied up, right? Here's your sweet spot, 20 to 40, and then it ran into overbought, exhausted territory above 40. Let me show you a little bit more specifically. We'll walk you through the chart step by step as the ADX triggers. Let me just grab a little sip of coffee. Okay. Here I'm just reminding you of what the numbers are. 0 to 10, right? Down over here, the market is trendless. There's nothing going on. Small influence can move the market dramatically, and we don't really know in which direction, okay? So that's trendless. Now, we go from 10 to 20. The market, so here we breached 10 for the first time, and now we poke our heads above 20. Now the market is saying, there is some interest in this market, right? Some volume is coming in. And really, what are we talking about when we say volume? It's not just purely a volume number. It's, was the volume able to move the price a significant distance? You know, was there some price movement? Because you can get a ton of volume coming into the market, but if it doesn't have the impact of moving price, then do you want it? No, because if the price doesn't move, you're not going to make a winning trade. So here is your heads up signal. Now is when you want to start looking for a trade, because we've breached above 20. We have a new trend beginning, right? So 20 to 40, the new trend is beginning. We have a new trend beginning, okay? The trend runs up to 40. The trend is now exhausted. So had you used maybe something like a MACD or a moving average cross, you would have also had a trend signal somewhere down in this area, right? Consistent with the ADX moving above 20. And I'm trying to keep the two things separate because it's a whole other conversation about determining direction. We're just talking about strength. So now I often get a question over here, but Greg, it popped above 20 and then it dipped below, right? It dipped below. So is that, you know, are we bust? No. That's actually quite normal, because when a new trend begins, you always get the early adopters who come in right away, and you get a little pop, a little excitement, a little energy, and then you get this little retrace. That little retrace is fine. Now, if we drop below 10, yeah, then you head for the hills, get out, go flat. But to dip a little bit below 20, you know, this is still intact, right? So the first touch of 20, something new is happening. After that, we don't care about 20. We care about either below 10 or above 40. And then it resets. Now we'll look for 20. Once 20 is hit, we'll look for above 40 or below 10. Okay, so 20 did not drop below 10, so we're still good. Market rallies, goes up, and now we're above 40. Market is now in its overbought, exhausted territory. I'm going to answer those questions in a minute. In terms of what was the question? A time frame, right? Now, the first touch of 20, the market was still down. So, correct, Harvey. 20 means transition. Transition means an old trend becomes a new trend, right? Some people call it a pivot. In other words, it was going one way, it goes the other. It transitions one way to the other. Yes, useful for day trading. I'll cover that in a second. Actually, what you're looking at here is a 4-range chart, so this is actually a day trading chart. Now, once we get to above 40, do we bail? No. We look for reasons why we want to may get out of the trade. Again, so you may want to use an indicator to do that, and you can use something like a resistance area. You may want to use something like a moving average crossover, right? Or just basically 2 MAs or a MACD crossover, or you can use an early alert like a stochastic. Number of different things you can use. So we're not saying that 40 you bail. What we're saying is 40 you start to adjust your stops, tighten up, protect your profits, and start to look for reasons why the trend is going to fail. We are now into exhaustion territory. So I'm going to review it quickly because we only have enough time to get through it. ADX, stay out. There is no trend. Small amount of volume is going to move the market around. You're in a chop zone. 10 to 20, we're in a transition. A new trend is beginning, right? So when we say a new trend, it tends to be opposite direction of the prior trend. So something new is happening. So we had a little pullback. The new trend is to the upside. Above 40, start to look for reasons to get out. We can see that. You could have also used that above 40 as an exhaustion play, counter trend, right? A counter trend trade at an exhaustion level. So you can do it on a trending trade if you like to be the guy that goes, or the gal that goes with the market, or you like to be the trader that fades. You wait for the trend to get exhausted, you find your signal, and you trade it back down to the downside. Where? Till below 10, right? You can hover between the 10 and 20, but you're going to reset when you get down below 10. So above 40, market is exhausted. Below 10, boom. Now, the trend is not complete until we've done one of two things. Let me go back. The trend begins when we move above 20. The trend is not complete until we have a 40 or a 10, right? 40 or 10 completes a trend. It completes it exhausted, we run out of steam, or we're just languishing. We are into a no trade or chop zone. That's why 10, 20, 40. So sometimes it takes a couple of days to get your head around it because the evaluation actually starts with a 20, right? And then you look at 10 and 40. So it's not really, it's not really chronological, but you get the picture. So what I've done here, this is a day trading chart. This is the NQ. I'm going to show you a couple of settings and setups. Drops below 10, pokes above 20, we have a new trend. Okay? Look at this yellow box over here. Do I get out? This is what I talked about earlier. Is the trend over? I've clearly run into a double top resistance. Do I bail on this trade? ADX says no because you haven't gone above 40. ADX says it's going to pause, sure. For day trading, I look at range charts, by and large, Frederick. So the ADX says we haven't poked above 40. There's still juice left in the trade. When do we get out? Below 10 or above 40. So using just resistance, the ADX said no, stick around. You haven't gone either overbought above 40 or you haven't got into the no man's land below 10. Now look, we dropped below 20. Absolutely, we did not drop below 10. We dropped below 20, so we're in a very quiet area. Trend is still intact, and then we rally back up 40. Trend is over. Now look to get out, right? And then you can see, lower highs, pull back below, we start to curl back down on the ADX, we drop below 40. All kinds of analysis you can do as a reason to get out. Same thing over here. Here's your new trend. And here's your exit. Now this is on the downside, so you got to change your focus a little bit, your mindset. Your brain has to just adjust a little bit. The new trend. I'm going to answer both of those questions about Renko bars and investments in just a minute. And then on the downside, right, exhausted above 40, you get above 40 and then it starts to hook back down, you know that you have an exhaustion. So again, new trend, we have a decline above 40, we're exhausted. New trend, we have a decline above 40, we are exhausted, right? So typical trading though, somebody asked about day trading. So if you want to day trade, if you want to day trade, you want to accelerate your time frame a little bit. So you want to stay away from time-based charts. You don't want to use a minute or a 2 minute. You want to go to a range chart, a range or a Renko, which basically means that each candle has the same height. I'm not going to get into a whole discussion about the chart types because that's a discussion for another time. But you want to go to a movement-based chart, which would be a range, a range, or similarly a Renko chart, and that will give you these types of setups. So here's a typical day. This is the NQ, so you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, about a dozen opportunities, right? You have about a dozen opportunities in this one day, and correct, Eric, what I've done here is I've accelerated, because if you want to be an active scalper, you want to accelerate your settings, so I've accelerated it to 5. Now, here's, in terms of settings, this is what I like to do, and I'm going to give you kind of a broad statement, and you can evaluate as you want. Always start with the time frame that you want to trade in and a nice round number for your settings, right? So start with a 10-period ADX. See how many, don't change your time frame. Don't start jumping from one time frame to another. If you want an intraday day trade, choose your time frame, call it a range chart. This is a 6-tick range chart, if that's your choice. Start with a 10-period ADX and then adjust, right? And just until it starts to look right, feel right, and give you the number of trades you want in a day. Now, here's the thing about settings on any indicator. If you're getting the world's best trades on a 10-period, and all of a sudden your system fails miserably because you're on a 9-period, what you've done is you've done some serious curve fitting, right? You've done some serious analysis that fit your system to what's happened historically, and it's not robust. No system should dramatically change whether you use an 8-period, a 9-period, or a 10-period. Maybe you'll miss a trade here, maybe another trade will be a little bit delayed in signaling, but it should not have a huge impact. And if you believe that a 1-period change in the setting, especially on a chart as fast as this, if you believe that a 1-period is going to have a material difference, right, then you're expecting your indicator to do something it was not designed to do. Now, with swing trading, when each bar represents a lot more information, you want to use a longer period. You want to encapsulate more information, and maybe that 1-period change will have a slightly bigger impact. But again, it should not have a material change on what you're doing. So a setting of 5 is a bit aggressive. This is for an active day trader, scalper. We're using a 6-tick range chart, which means every candle has the same height, top to bottom to top of 6 ticks, right? 6 increments of price, and this is about a dozen trades in a day. That's pretty active. You can slow that down by slowing down your range chart. You can slow it down by slowing the ADX setting as well. And here are the corresponding exits, either exhaustion or drop below 10 on the different entry patterns, the same dozen or so entries, right? So here's oh yes, so in terms of the overbought, oversold, 10, 20, and 40, those don't change. Those won't change whether you're day trading, swing trading, whether you're using a range chart, a day chart, right? Those are always going to be the same. It's nice and easy. You build your so day trading, I suggest a Renko or a range, as opposed to, I'm answering Al's question, as opposed to a time-based chart. Because the thing with a time-based chart in a day trading scenario, time always moves forward. You're going to get a candle, right? You're going to get a candle in the next 2 minutes, even though the market may have done absolutely nothing. But if you're using a chart that represents movement, meaning a range, means we're measuring actual price movement. Scott, the 5-5 represents the settings of the ADX, means 5-period with a 5-period smoothing. Those are just a standard when you set up the indicator. So in other words, it looks backwards 5 periods or 5 candles, and it applies a 5-period moving average to it. So again, quick, I've got a couple more to go through, so let's just a quick review. No trend, below 10, 10 to 20, transition, right? Above 40, look for the exhaustion, and then all the way back to 10. So the above 40 or the below 10, that's when you're concluding your trade. So here's a really cool thing. One of the things that I love. Any options traders in the house? Raise your hand. Can I get a hand raise? Who trades options? A lot of people trade options. Love the options. How can I use the ADX to trade option strategies? Well, guess what? Some of the best option strategies. Oh, nobody said yes. We don't have any option traders here. That's odd. Some of the best options trading strategies are when the market. There we go. Perfect. When the market is doing nothing, right? When you write strategies, condors, spreads, when do you want to do those? Do you want to do them in a high movement environment? No. You want to do them when the market's not doing anything. So what do we know about the ADX? 0 to 10, no trend. Do your condor. Market is trendless. It's not going anywhere, right? Butterflies also. Market's not going anywhere. Do it in a zero trend environment. The market is transitioning. Maybe now you want to look at some directional trades, right? Or we're having a real strong move. Maybe you want to do a ratio spread to capture a sweet spot. So if you understand the ADX 10, 20, 40, you can apply it in all different places, including options. Keep it simple. I know there's a bit of information here, and I wanted the hour to be very educational. I wanted you to leave with something that you can sink your teeth into. So keep it simple. Remember 10, 20s, and 40s. That's key numbers, right? It starts with a 20, and then you look for your 10 and your 40. You know this guy. So what does he say about keeping it simple? Investors should remember that their scorecard is not computed using Olympic diving methods. Degree of difficulty doesn't count. Keep it simple. 10, 20s, and 40s. I want to show you one other thing. Can the ADX system be used for day trading? Yes. So as I mentioned, you want to use Renko charts, range charts, charts that measure the movement, futures trading. All the charts I've shown you thus far today was currency, not currency. We've had oil in there, crude oil futures on a 4-range chart, and we also had the Nasdaq, the NQ. Stock trading, absolutely. Swing trading. I'm going to show you a swing trading chart in a second. Option trading, I explained you can use your 10, 20s, and 40s, right, to plan when you want to do an option trade. High probability of movement, low probability of movement. Going directional with your options, going non-directional with your spreads. Now, in terms of swing trading, back to the free stock charts. You can use a free charting indicator. An absolutely free indicator. This one, or there's a number of others, doesn't make a difference. This is what I want to point out about the swing trading environment. And this is kind of important. Look at the time frame, right? When we're talking about day trading, the trades happen, throughout the day. 12 trades in 6 hours. It's 2 trades an hour. You can kind of basically time around how many trades you should get. But when you're swing trading, here's an example of what was this? Green Mountain Coffee Roasters, right? This is an exhaustion play above 40, and the prior trend has exhausted. So what was the prior trend? Up. Trend is exhausted. We hooked back down while above 40. So we're going to do a counter trend or exhaustion play. Short. What's the signal to get out? Down at 10. So this was a move from 124 down to $99, and then above 20, the new trend started, but this was the trade over here. But just for your own knowledge, education, edification, this triggered on the 24th, I don't remember what month it was, I think it was August, and the trade lasted until roughly the 5th of, this was about 6 weeks, give or take. Right, a full month plus a couple of weeks of trading. So why is that material? It's material because if you put on the trade and the thing sits there for 2 or 3 bars, you know, I don't want you to say, oh, this thing's not working. Come on, man, I've been in this for 3 days already and I haven't made my retirement fortune. So I want you to understand that if you're using this for swing trading, what's it going to look like? Expect your swing trades to be 4 to 6 weeks, which is a nice time frame, right, for a swing trade. You could have done this with an option also. You could have bought a put, you know, you could have sold calls above the market, you sold a spread, whatever. So, but just so you understand, if you wanted to do an option trade, you know, you would have to place your option expiry beyond when this trade was likely to expire. So don't expect a 2 or 3 day trade using this system. Expect 4 to 6 weeks. Now, in terms of screening for stocks, yeah, you want to see stuff that's, you know, was below 10 and now is approaching 20. That's where you want to get your alert. The other thing, one of the most important things about screening for stocks, and who's asking me, this goes back to one of my earlier screens, was not every market and not every stock is going to respond well to this system. And that's just how it is. What's going to likely happen is you're going to find a handful of companies or markets that do really well over and over and over with the ADX, and you're going to trade them throughout the year. And then you'll find a bunch of stuff that it just always fails for whatever reason. It's just, you know, sometimes you go on a date and there's some sparks and there's magic. Other times there's no second date. And that's the way it is. You know, sometimes it just meshes beautifully with a particular instrument or a sector, and sometimes it doesn't. So you have to do a little bit of a review historically. What did it do the last 5 times it triggered? Did those trades work out? You can absolutely use it on ETFs, absolutely. No reason why not. So, look at that. I'm within a minute of what I hoped was to bring to you today something that you can use, right? I don't want to, you know, I've been on your side so many times. I've gone to, you know, I can't even tell you how many webinars I've been to in my life, but I always want to leave with something that kind of gets me excited and says, oh, I want to try this. This is something that's interesting. I want to, you know, see if this helps my my trading. I don't just want somebody to you know, to make promises and then try to sell me something. So whenever I do webinars, I want to make sure that you leave with something that is usable and you know, and can improve what you're doing. And I hope that I was able to transmit that to you here today. So it's a simple indicator. It can improve a lot of what you're already doing, and you can also build a complete trading system around it. Now, I am a trading educator, so I do offer a course. The ADX course is offered under chart pattern trading. If you go to chartpatternTrading.com/offer, you can actually save 50% if you use MarketFest as the coupon. It's not an expensive, with 50% off, it's actually quite inexpensive. It'll only cost you a few $100, and there's tons of great videos in there. But mostly what I've hoped for today was, you know, to be able to connect with traders and for you to recognize that the way I approach the markets, the way I teach, and the stuff that I use, it can be easy to interpret, you know, and I like to simplify. I don't like to overcomplicate, or I like to really bring it down to things that are usable, manageable, and as simple as I possibly can. So it takes about an hour, as I've shown you, to understand the ADX, to complete the whole system using the DM plus DM minus as an actual trading system. Again, it's about an hour's worth of videos. The course actually has many, many more than that. Tons of other stuff, psychology, other systems and ideas. But I'll leave it there. So I will answer a couple of questions now if there are any. And let's see, let me just scroll up here and see what we've got. Thanks, Mary. You've been using the ADX and I found it very useful. And even more good suggestions that you hadn't considered. Okay, you're welcome. RV, can it be used for Forex trading? Yeah, absolutely, it can be used for Forex trading. As a matter of fact, one of the great things about Forex is the trendiness, right? So you know that in Forex, you can hit a trend and it can just last and last and last. So that's one of the great things about the ADX. It'll keep you in there for when that, you know, and let you know that the trend wouldn't expire. What size Renko would I use? Depends on the market. depends on which market. Different markets have different volatility. So, oh yes, so for the TOS, let me paste that and send to all. Did that work? Did you get that? I don't know, I hit send to all. Okay, good. What size Renko? On the indexes, well, generally speaking, when on the NQ, on the ES, on crude, I like to stick around a four range or 4 Renko is pretty, but my hesitation here is that the size of the chart you want to use, or the time frame, the size of the range of the Renko, depends more on how active a trader you are. So I don't know, I can't answer the question and say this works better than that. Define better. One will give you 20 trades in a day, one will give you 3 trades in a day. Which is better? I don't know, right? It depends on you. I think 20 trades in a day is absurd. I don't know why anybody would take 20 trades in a day. I like to take 2. I like to be done my trading by about 9:45 a.m. So, if I can hit my daily goal in an hour, then I don't want to sit around all day. So I prefer more opportunities, but I don't take them all. Oh, that's a good question. When should I trade? Market hours, outside of market hours. Generally speaking, I would always suggest trading market hours. So there's always a market open somewhere, wherever you are in the world, right? So if you're in the US, you want to trade 9 a.m. till about 4 p.m. 9 a.m. crude oil opens, or 8:20 gold opens. I don't want to trade a market that is outside the regular hours, and the reason for that is regular hours trading is when the institutions trade. The institutions very, very rarely, unless they have to, they don't trade. They don't trade in the outside hours. So what happens is the market becomes a lot more random, a lot choppier when you only have speculators. So I like to see the duality of institutional traders plus the speculators. That makes a good liquid market. So depending where you are, and I don't know where you are in the world, but find a market that's open in your time zone. So if you're in Europe, maybe it means trading the ADX, the DAX, or trading the FESX is a good market, right? So yeah, so you may want to trade something based on the European time zone. The DAX is a good aggressive market, or the FESX, which is the Euro Stoxx 50, is an excellent market. So try to find something that's open. Equivalent, the equivalent is 9 a.m. New York time to 4 p.m. New York time. Al is asking, this is an excellent question, Al. Does the using Renkos versus candles change your ability to read candle patterns, i.e. shooting stars, etc.? You know what? That's an excellent question. It's the first time anybody's asked it. I think you win the t-shirt. Absolutely. When you use a Renko or range chart, you are basically smoothing out or negating almost all of the so-called Japanese candle patterns. You're taking that element out. The patterns that will start to emerge are basically very, very simple double tops, double bottoms, pullbacks, strong V patterns, W patterns, M patterns, etc. So you are correct. It totally smooths that out. So you won't be able to rely on them because it's removed that from the equation when you use those charts. As a matter of fact, it becomes very difficult to get it. You can't on a range chart or a Renko chart get any long leg candle patterns or stuff like that, because by default they're forcing all of the candles to be the same size. Good question. Okay. Anything else that I can help you with today before we wrap it up? Let's see what else. Hasu is asking when to use the length of 10, 14, or 6. And the answer to that is start on the time frame you want to trade, right? Start with the setting that's in the middle, 10, and adjust see what it looks like on a setting of 10, spend a day or two watching it, go down to an 8, go up to a 12, or maybe run 2 charts simultaneously. I don't consider volume. No, I don't look at any volume independently of this indicator for this. I don't have a TradeStation in front of me, so I can't show it to you. If we do have any TradeStation users who want to send in a configuration, then I'd be happy to share it. But I'm not a user, so I don't. I know a number of our members do use it. I can poke around and see how they changed it. It should really just be one setting, right? Just change the indicator from a line to a bar. Oh, if you want to get a hold of me, just go to either one of my websites, chartpattern.trading.com or the Trading Zone, and just drop me an email. I'll actually put my email right in the and you can always get me there. Both websites also have contact forms, so you can. And I'll do my best to answer whatever questions I have. Keep in mind, on the support questions, it's kind of difficult to set up your charts for you. Yes, I explained the difference between range bars and candles in the course. I do, Robert. Okay, the Renko question I answered. It depends on whether you're. Oh, somebody asked about investments. Well, I guess in terms of investing, I would, I guess my longest time horizon is really a swing trade, to be honest with you. So when I talk about investing, like retirement investing, I basically do, dollar cost averaging in a number of different markets. That's like my 3-year, 5-year, 10-year stuff. Anything else, then yeah, you would look at something like this, which is a 4 to 6 week swing trade. So, in the life of a day trader, that's an investment. A trade that lasts more than 10 minutes is an investment. Okay, well, basically, a Renko chart is the same as a range chart. I mean, let's just go back. I can see there's a number of questions, and maybe it couldn't hurt to. Okay, so a range chart basically means you're going to print a new candle whenever the minimum range is met. So we set the range here at 4 ticks. In other words, every one of these candles is exactly 4 ticks in height. So they see 1233.30 up here. If a candle opened at 1233.30, then it would close at 1233.34 or down at 26. It would always have the same height, right? So it's just the way of using a chart in order to filter out some noise in the market. So the noise gets filtered out because we're forcing all the candles to have the same size. Now, a Renko is very similar, but what the Renko says is I'm not going to include the tail on the candle, right? I'm only going to include the body of the candle, so that if this candle were to run up 3 ticks and then run down 4, you would only see a down candle. You would not see the 3 ticks upwards, because the Renko would say that's noise because it closed down. So I'm not going to print any tail up there. I'm only going to show you that it closed down 4 ticks. So there's a little bit of finesse that you have to use when using Renkos. My overall suggestion would be that you use Renkos when you're trading on a fast time frame. If you were to trade Renkos on a very slow time frame, then you'd actually be losing a lot of potentially valuable market data. So you have to be a little bit careful of that. But if you're scalping, then you should be fine using a Renko. I use them all the time. Stocks. Well, a Renko is not set as a minute. A Renko should be set as a height, right? Actually, Renko, the actual definition of a Renko is a brick size. What size of the brick? So it actually excludes any notion of time. And if you think about it, it makes sense. Time always moves forward. So you get into some chop zones and you get some funny looking candles because the market's not moving, but time is moving. And then indicator starts to give you some strange readings because it's still going to read what's happening on the candles, but the candles are not really significant because there was no price change. So by forcing it to a Renko or a range chart, you're saying, well, only show me and only measure if there's actually price change. And then when we say, okay, well, what should that price change be? Well, I'm saying it should be 4 ticks. So if the market doesn't move 4 ticks, don't show it to me because nothing material has happened. Sorry, a couple more questions here. What is the highest range bar I would use for longer term trading? Okay, and do I use ticks? I don't like tick charts. The reason I don't like tick charts is tick charts have a lot of inconsistency between one trading platform or another. So if we say that this candle has to have 500 ticks, the question is, at what point did you start calculating those ticks? Did you start at 12 midnight? Did you start at the open of the market? Or did you start when you turned on your charts? Every platform is different. Each one of those platforms will handle that differently. Consequently, every candle will look different. So when you're talking about tick charts, you'll end up with 2 traders looking at the same chart and seeing something completely different. So I don't like tick charts. Don't use them. By contrast, a time chart is always the same, right? Time starts and closes at the same time. And a range chart is always the same. The height is always going to be the same. So I like to have that consistency. Do gaps significantly impact the ADX reading? Yeah, sure, of course, the gaps will. So what you'll want to do is trade the regular session, as I mentioned, because that's when the better trades are going to happen, but leave the chart running into the pre-session so that you won't be impacted by a large gap, right? Because if you just turn on your chart and you have a gap, then obviously you're going to have a bad read on any indicator, not just the ADX. So Jonathan, I thought you have to set Renkos with ticks. It's just in the terminology. A tick chart actually measures. When we say a tick chart, it measures how many transactions occurred in the candle. And we talk about a range or Renko chart, we talk about ticks in terms of the minimum distance size. So a tick chart should really be called a transaction chart, how many trades took place. To call it a tick chart is inconsistent, but that's the terminology. When we talk about a range or Renko chart, we talk about the height of each candle measured in a tick, meaning minimum increment that the market can move up or down. All right, well, I'll leave it for now. We can have more discussion later on, or if you're unsure about any of that, then drop me an email. I'll do my best to help you out. And now we are at 10:30, so I will pass the mic on to the next speaker, and thank you all very much for joining me today. I hope it was enjoyable, useful, educational. Look forward to hearing from you. And thanks everybody for joining us at the MarketFest today. You can check it out, chartpatternTrading.com/offer was the final slide if you wanted to have a look at the current MarketFest offer. Thank you all very much and have a great day.